What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, NIO, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So the month of July for me has been a bit hectic with travel, hence why I have not posted in the past couple of weeks. It's probably a good time to know that I also have more travel plans the first couple of weeks in August, and so I'll do my best to keep up with the content, but it will be a bit more spotty. So with that awareness out of the way, let's talk about NIO. The stock closed Friday at $4.87. That's up almost 5.5% for the week and just under 9.5% for the month. After failing to break out to the upside in early June, it's good to see momentum building back. There's a few things that play into this, and so in today's video, I'll go over the latest exciting news on NIO. We'll then take a look at the latest analyst ratings, some changes here, and I'll close with where I now stand as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on anything pertinent I will be sharing. Drop the video an early like if you haven't already, and smash that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. The NIO stock came into the month of July with some excitement on the back of the June delivery numbers. We'll go over those in a bit here, but early on, the price saw a solid move up, crossing over $5 once again, only to drastically drop right after. The cause of that drop ties back to the sudden announcement that NIO's chief financial officer, Stephen Fang, had resigned. The announcement was made on July 5th and was effective immediately that day. The reason given for the resignation simply stated, and I quote, "personal and family reasons," end of quote. Generally speaking, the resignation of a chief officer in most corporations is typically not a good sign, right? Which explains the immediate drop in stock price. That said, given that NIO acted swiftly with an internal replacement who has significant tenure, it actually quickly eased most of the concerns. Morgan Stanley analyst Tim Sao, who has a buy rating on NIO, also released this note this past Monday, reaffirming that he didn't expect this change in the leadership team to, and I quote, "disrupt NIO's current operation or future fundraising plans," end of quote. Given the recovery we've seen this week, I'd say that the messaging went over well, and most are refocusing on the actual results NIO delivered. And these were stellar results. This is even before delivery of the Envoy L60 starts. As a reminder, the L60 is currently slated for September deliveries this year, and so let's run through the numbers. NIO delivered 21,209 EVs in June. This beats the previous single month delivery record of 20,544 EVs we saw this past May. For perspective, that's a 3.24% increase month over month and an impressive 98.1% increase year over year. Looking at Q2 as a whole, NIO delivered a total of 57,373 EVs. That represents a massive, and I mean massive, 90.91% increase compared to Q1 this year, and an even greater 143.9% increase year over year. They crushed it. There's no denying that. Not only are these all-time record high numbers, but NIO actually exceeded their guidance range of between 54,000 to 56,000 they provided during the Q1 earning call. We'll have to wait and see how this translates to margin expansion during the next earning call. That said, it's undeniable that NIO is executed on the plan they communicated at the start of this year. EV sales and delivery have continued to rise month after month, with even more room for expansion ahead as the Envoy L60 starts deliveries. And as I step back and look at these interior spy shots that were leaked, I'm fairly confident that this will be a popular model for them. On top of all that, they are also keeping their commitment to continue to expand in Europe, right? They added another new NIO house in Germany, making it the second one to open up in June alone. But maybe the biggest example of their commitment to continuing to try and gain market share in Europe, well, it's the fact that despite the new tariff laws that have been passed, making it more expensive for NIO to export to that region, NIO this week made the statement that pricing to consumer would not increase. Now, to be fair, those new tariff laws are not going into effect until November this year, so they have a little bit of time. But NIO did state that their current stance did not mean that future price increases would not occur. But for now, at least, they are prioritizing the customer and maintaining the status quo. With the pricing war between NIO, Tesla, and other competitors easing, there's a high likelihood that margin will continue to recover. As sales numbers continue to increase, that should all go to help with progress towards profitability, which then translates to confidence in the company and improves stock's performance. The bottom line here is that even though the stock price action continues to be lagging, we all see it, there continues to be a lot of positive in the way that NIO has been executing as a company and with their growth seen in record delivery numbers, right? And so it is important to note that the recognition for that execution continues to be reflected in the way analysts are rating the stock. The overall consensus rating is still a moderate buy, made up of 12 ratings. The breakdown is as follows. We have 5 buy ratings, 6 hold ratings, and a single sell rating. The high end of the range has dropped slightly from $10.40 to now $10 even. The low end of the range remains unchanged at $4 even. The average price target sits at $6.19, meaning that the current expected upside from the close on Friday is another 27.10% gain. That's not bad at all. And so this now brings us to what I'm personally doing and how I'm approaching the stock. Despite the fact that I have been and continue to be bullish on NIO, I have not added to my NIO position. The main reason being that my funds are being allocated to travel at the moment. I just can't do both. So that's where we are. Luckily for me, timing has been great given the fact that we've consistently failed to break above the 50-day moving average and push higher since we fell under back on June 7th. That said, things could be changing in the not so distant future. Just this week, right, we received positive inflation data. The relevance here, of course, is that easing inflation goes towards supporting the start of rate cuts sometimes this quarter. This is something I've been talking about. But most importantly, those rate cuts would change the flow of where money gets allocated. For the past year, institutions, fund managers, and many retail investors have all been piling into big tech. This has resulted in the S&P 500 and NASDAQ all hitting new record highs. Over and over and over again, but the rally has been highly concentrated in those specific names. Now, what we saw this week with the inflation data release is the start of the sector rotation out of those crowded names like Nvidia, Microsoft, Apple, Taiwan Semiconductor, and others. That's the sea of red you're seeing on your screen here. And with that rotation out of those names, money is flowing into small to mid-cap stocks. That's all the green you're seeing all over the screen there. And if you've been following the channel for a while, you've heard me say this, but those rate cuts are going to be important for NIO as well, as the rally broadens out to small to mid-cap companies that have been beaten down. Names like NIO and ChargePoint in the EV sector is where 2x or greater returns opportunities are. The last thing I will say is this. I continue to stand by the fact that NIO at $5 or under is a bargain. Okay, analysts are projecting the stock could return to $10 in the coming year, meaning that anyone buying at these levels would double up their investment. But over the next few years, the return on this investment is very likely to be significantly higher. That's just my opinion. And so for me, NIO is a long-term hold, and as soon as I'm in a position to buy again, that's exactly what I intend to do. But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. And if you feel so inclined, use the thanks button at the bottom of the screen. For my newcomers, subscribe, it's free, and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video and possibly during the week for an extra one. Till then, you can keep up with me here on X for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.